that has listed today on the exchanges. A debutant coming in there on the D Street. Discount is what the listing happened today. Now, to talk about their overall performance and outlook going forward, what should we be watching out from the company? We have Gaurav Singh, who is the CMD as well as CEO of BlueStone Jewellers and Lifestyle, joining in with us for that. Gaurav, good morning and congratulations firstly in terms of your listing. Muted day coming in terms of the listing today, but a lot to watch out for from the company going forward, right? So let's start by talking about first in terms of overall your profitability. You know, that's what we were talking about even last time as well. Now, you're saying that net losses last time you mentioned mainly was a reason because of the front loading in terms of investments. By FY26, FY27, if you could give us a number, when can we expect the company now to start seeing profits? When will this front loading of investments end?
Sure. I think, so first of all, thank you for hosting me today. It's a big day. It's an exciting day for all of us at BlueStone. And we are excited to be listed in the public markets, and we hope to kind of continue delivering great growth and great results going forward. Yeah, I think one of the things which was talked a lot about was losses, but I think also we need to look at those losses in the right fashion. So in fact, people who are kind of better, who understands accounting, etc., better, who can actually see that there's a multiple non-cash components also that were sitting in there, which is kind of more of accounting, which is more of because of accounting standards. For example, ESOP losses or ESOP cost, which was I think somewhere around 50-60 crore. For FY26, which is a non-cash. It's more of a remuneration to the early employees, etc., which is there and which generally eases off in a year or two. Similarly, India's accounting, 116 accounting, actually it front loads a lot of rentals. So because of the accounting practices, the rental which is booked in the books is significantly higher than the actual rental that goes out. So I think if you account for a lot of those things, or if you actually take a lot of those things into consideration and then look at YOY numbers, there is a significant improvement. I think so. We'll soon be releasing our quarterly results. Also at that time, we'll be talking about forward projections and forward guideline, etc. Right now, it's just I think it's a little too early for us in the day.
All right. Hi, Gaurav. Good to see you win, and congratulations on the listing. A lot of happy faces out there, and good job with the bell. You're giving it a good ring, But the street, when you report your numbers, they'll be focusing on profitability now that you're listed. So we take everything that you said into account.
Yeah.
You're indicating a couple of those points are probably one-off in nature. For FY26, the company turns profitable?
See, I still hold back my comment on that to the quarterly results when we declare those in coming weeks. I think we've not worked on that honestly, in the sense that the exact forward commentary that we want to give, though we have the plans, etc., in place, and it's going to be significantly better. In fact, last year also, while what the market sees is a full year number, but with that 40% growth year on year, if I see the difference between the quarter 1 and quarter 4, that itself is significant. Now, given the nature of disclosure standards, etc., I cannot break down the quarterly numbers when I file my RHP or DRHP, etc. But when I start declaring the quarterly numbers, I think the difference, people will see a significant difference between the yearly numbers and the quarterly numbers themselves.
One number that you can give me is ad spends as a percentage of sales. You told me that's likely to come down. Come down to what levels?
Like I said, I think any of these forward-looking statements would just wait for...
Gaurav, it's permissible now. You're listed. You can give
now you can say whatever you want to say.
It's on board. I mean, when you come to money, we know that it's under regulations. But once you're listed, you can give us aspirations. No problem.
Sure. So I'll tell you a few numbers. So essentially, I think for the last full year, that number was around 9%.
Yes.
On a run rate basis, that number is trending closer to 7%.
Got it.
Okay.
And it's going to come down from there.
Okay, great. Gaurav, what
there's
about
significant, so there's significant operating leverage sitting on different
absolutely different levels.
Similarly,
and different
corporate and common cost is also kind of on a quarterly numbers, those are significantly down.
Okay. And Gaurav, what about in terms of the SSSG growth as well? How is that shaping up? How is the demand shaping up? If you give us an indication in terms of that, obviously over the years from FY23 to FY25, I'm seeing a bit of a reduction coming in there. But from here on, Is this 32% level maybe something that we'll see this stabilize at?
So we'll definitely see above 20%. So in fact, so far what we have seen is even for the oldest of the cohorts, stores which are open 4 years, 5 years, 6 years back, there also the SSSG was in excess of 20%. So we have never seen any cohort of stores where our same store sale growth has ever dipped below 20%. So I think, and that is something that we continue to see in our current numbers also. So I think SSSG is going to be very, very strong. We are very strongly supported by multiple tailwinds. I think the kind of designs that we operate in, the kind of use case that we operate in, the way we operate, the whole omni-channel behavior, which is becoming more and more commonplace over, let's say, whatever the behavior was around 5, 10, 20 years back, where people would just walk in cold into stores. These days, people actually research online. People do a lot of discovery online, and I think all that is aided us, and all those tailwinds are the ones which are resulting in very strong sales growth. When we see those numbers, we actually see them distilled by different cohorts and so on and so forth. So we have a better understanding of how the granular performance is. I think at a blended level, because we are front loading our investments to grow at a fast pace, some of those numbers are not kind of are fully realized in our P&L right now. But I think the moment we kind of we slow down in percentage terms, so not in absolute terms. So last year when I opened 95 stores, that was on a base of 190 stores. So that's a dilution of almost 50%, or 50% of the existing stores were opened in the next year. This year when we are planning to open 75 to 80 stores on a base of 275 stores, that dilution is significantly lesser. So I think as those, and then also at an increased top line, I think all the common costs like advertising, corporate and common costs, etc., will also start becoming smaller and smaller percentage of the overall revenue. So I think the profitability, there is going to be a very sharp turn to profitability. And I think in quarterly numbers, we'll be able to kind of talk about those in a lot more detail.
You want to give us your market share in comparison to the peer set?
So I think CaratLane and BlueStone are the only two companies which operate in operate in the omni-channel space. I think between the two of us, we have less than 1% of the overall jewelry market share. So I think what's more important is that this new way of buying jewelry, that is catching up. So I think it's less about the share between CaratLane and BlueStone. It's more about together CaratLane and BlueStone, what kind of market share can they generate, or can they garner over years?
Okay, Gaurav.
I think CaratLane did last year with 3,500 crore or so.
Okay, Gaurav.
Ours was around 1770 crore.
Sure. So we will watch out for more details, Gaurav, and we're going to hold you to coming back after your earnings that you report as well, and give us more details in terms of numbers.
I know. So in fact, I'll also get slightly more used to.
Nigel grilling you, that's what you'll get used to it as well.
Gaurav, we look forward to having you back on the channel post your quarterly results or other developments that you will be announcing. For the time being, celebrate with your family, with your team. Congratulations on the listing, and we look forward to chat up with you in the time to come. Thanks a lot for joining.
Certainly, Nigel. Thank you, Nigel. Thank you, CNBC team.
Okay, all right. Let's slip into a short break. On the other side, we have Somal Mehta, who will be joining in to give us his technical view on the markets.